Hey everybody, good morning. How's it going today? It is Friday morning, just before September 11th. Wanted to give a prayer, I guess, for everybody who experienced in an emotional way, whether you were there or not. I can't believe it's 20 years already. I actually had my first trading office in Nassau County on Long Island, right near the Roosevelt Field Mall. And just to give some context of what it was like that day, we were the only office in the building that had a television. And obviously, we're all watching the financial stuff going on that day. And the entire building was in my office. It was only a 2-floor office building, but a surreal moment. So just wanted to say prayers to everybody who lost somebody on 9/11, which is obviously tomorrow. So hope everybody is having a very, very good week of trading. We actually have some exciting stuff we're going to talk about today. I will give you a sneak peek of what we're going to talk about today. Let me actually pull that up to the top. All right, there it is. That's the topics of today. We're going to talk about sectors in play and how that affects trade activity, which is a big deal. Then we're going to talk about how we had an exciting conversation about losing less. I know that seems kind of weird, but not if you're a professional trader, and I'm going to explain why. We're going to get into a little visual of 10 trades, and really the concept that we're going to talk about there is based on the fact, and I want to get a little participation. Raise your hand if you always feel close but can't seem to get profitable. We're going to tackle that today. We're going to talk about 3 ways to find stocks to trade. And if we have some extra time, then we're going to dive into any questions that you might have to end the week. So stick around. I'll be back in just 1 second. Okay, so obviously everything that we do is for information purposes. All the final decisions are up to you, but hopefully our mission is to get you to the point where you're making better and better decisions, where you feel you expect to make money, which, by the way, that is what professional traders think when the market opens. And this is something that if I could give to you right now, that is ultimately the goal that you want to have. It doesn't matter if you just started yesterday or if you've been trading for longer than a year. You should wake up every day expecting to make money. And I'm not saying you're going to make money every day, which is actually going to tie into what we're going to discuss today. But you should expect to make money for 2 reasons. Number 1 is you have a trading plan that has an edge. Number 2 is you trust yourself to follow the edge, which actually is what we're going to talk about today in one of the main topics. Let's say I was given some advice, for lack of a better way of putting it, from somebody who said that the live streams are awesome, but we do too many introductions because we only have 30 minutes. So I'm going to do just a couple. How about that? I'll just do a couple because I want to pay everybody back. I want everybody to know how much I appreciate they're here today. So let's see, Gus from the Bay Area. I got to tell you, you're up at 4:30 in the morning. That is just amazing. John Bates, I don't know what else to say except I'm so grateful that you're a part of our community. You're one of the founding members with us, and I'm really glad that you're a part of with us. Also, entrepreneur. That it's super interesting. We actually had a conversation the other day about who appears to be getting the greatest value out of our community, the private community, and what we do. And we kind of came up with the concept that it is those who have an entrepreneurial mind or are actually entrepreneurs, where you understand that you have to learn the skill. You have to kind of learn how to run the business, and then you actually go out and run the business. And John, and quite a few other people in our community are actually entrepreneurs. I've been an entrepreneur my entire life. I wouldn't change it for anything in the world. Let's see. Hey, Tony Giles. All right. Good morning. Good morning. Petrol Head, 20 years. Yeah, it's crazy, isn't it? I can't believe it's 20 years. We actually had one of our members of our trading floor at that time. He lived in Brooklyn. I'll never forget this. His name was John Gagliardo. Really a nice Italian name like myself, guy living in Brooklyn, right? He was driving home that day in the middle of the day. So obviously this, what happened early in the morning. Yeah, I think he was driving home like 11 o'clock in the morning, and he called us from his cell phone, and we put it on speakerphone, and he said the sky was on fire. That's what it looked like on the Southern State Parkway heading into Brooklyn. What is that highway that Southern State turns into? Not the Cross Bronx. What the heck is that road? I'm drawing a blank. It'll hit me later at like 11 o'clock. But anyway, again, just want to send prayers out to everybody who lost somebody on that day. My dad was actually down there for the entire period. My dad worked for Con Ed for 42 years. And if you remember, you see the images after 9/11 when they were celebrating those big blue lights, that the popular images of downtown at that point. My dad actually built those lights. He worked with the city at that time to put up those two blue lights that was supposed to mimic the Twin Towers. So that was amazing. But you know, my dad has pictures of what happened on 9/11, and the actual pictures are absolutely nothing like what they actually showed on television. And thank God. Thank God. We were, I remember being on Long Island, and you had to watch, even on Long Island, miles and miles and miles away from the city, you still had to worry about asbestos being in the air. So I just can't imagine what it was like for everybody to have been down there, especially the first responders and anybody who had to clean it up. So I just want to pay our respects to everybody who happened to have lost somebody that day. Okay, so that's what it was. Guy, thank you. The Belt Parkway. I was drawing a blank. I couldn't remember. Thank you. Let's see. Sean Jacoby, good morning. Thank you. Appreciate you being here. Oh, by the way, if you could, we're going to get into it right now. If everybody could please do me a favor. If you're finding these live streams helpful, obviously I love doing them. If you find them helpful, if you could please click down and subscribe and hit that alert button. That would mean a lot to me. Okay, so we're going to get right into the content. If we have some time today, what I really want to do is I want to get to some Q&A. If not, we can set the Q&A for next week. So we're actually going to set the tone with looking at the market. The market and the futures are actually trading up. If we drop down to a little bit lower time frame, you can see where we are now compared to compared to yesterday's close. And we actually have a pretty solid uptrend right now. And these are really the levels that we want to draw. Now, something that a lot of traders are pretty excited about, something that we've been talking about quite a bit, is working the charts. I know Brian Carr from our community has started doing this in a much more systematic way since we started talking about it. And this is the way to work the charts. And actually, if we really wanted to, we could do the same thing over here, which was kind of earlier in the morning. And you get to feel whether or not the market and your stocks are obvious or not. So what we kind of talk about is you obviously have order flow, and order flow is pushing in one direction or another. But then the order flow breaks. And this is really what we're looking for. And I think we've mentioned it before that this is really where money goes to die. Money goes to die when you don't recognize that the trend was broken. You have the previous high prior to the trend breaking, and then you have the low where the trend broke. So that's kind of the right price right now. And only one of two things can happen here. You either break back to the upside and continue, or you have a new move to the downside. And this is kind of fun to draw, and it's what I do literally all day and every time frame. And I think if I can give you a little bit of a, kind of like trading wisdom, using moving averages and all that kind of stuff. I think I got to move over a little bit. Using moving averages and all the technology that's available in charts is amazing. It alerts you to ideas. It gives you some really obvious ideas. It's above the 20-period moving average, or the golden cross where one crosses down the other for those bigger moves. Nothing will replace working the charts. You get a better feel for the actual price. You dive a little bit more in context into the candles. So if we zoom that out a little bit, this is the box, and that stays the box until it's broken. And then when it's broken, we draw a new line, and then we reset the levels. And this is an important thing. It doesn't matter if you're doing this on a 1-minute chart or if you're doing this on a weekly chart for swing trades. So get into the habit of doing that, and you'll be very, very happy that you do, because you get a sense of how to read the tape in a deeper way that you really can't get just by having the moving averages out there. So we're gonna segue over into this. We're gonna actually pull up some charts. We're gonna pull up some ideas, and I want to focus on the first thing that we have up on the screen here right now, which is sectors in play, and how those sectors in play translated into. Let me see. All right, look, we got everything. So one of the things I want to point out is if you look all the way to what is, I guess it's on my right, your right, where the sectors, there was really not much going on yesterday. Nothing finished more than 1% positive. You take it over to the week, and nothing actually is positive the week. And just so you know, you can see on the top here, the week is the last 5 trading days. So one of the things that we discussed yesterday in our community, I think this is probably one of the most prideful things that I have in the community, is the fact that I can impart like what didn't work for me over the years in trading to really cut the learning curve for somebody who's new, who comes into the community. And we had a lot of conversations yesterday about trading less and being happy about trading less and or having small losses because of what we just talked about, where you'll pay attention and there's not that much obvious. Now, that doesn't mean we didn't trade. We had a lot of really good trades yesterday. And I think probably the top of the list yesterday was a trade that we called out. Actually, the last trade that we called out here yesterday on the live stream, which was DKS, Dick's Sporting Goods. We set it up as a trade that was pulling back from all-time highs. Maybe we could take a quick look at that chart just to get into it. And we'll actually pull this up on the daily chart. And you can see how the trade played out here. But really what set it up more was the order flow and the stock pulling back from all-time highs. And if you remember yesterday, we made the distinction, and it was pretty good. We had some nice conversations about the distinction between patterns and order flow. Those patterns need to be in the context of obvious order flow, because that's where the probability of following through. And if you remember, we had a post-it pad moment yesterday where we said, while you're building your arguments for trades, the real question you should be asking prior to the trade is not what is the right entry. It's what are the odds of my profit target being hit versus my stop loss. And then you put all of those pieces together. So the trade in DKS yesterday met a lot of the criteria, but then we were still waiting after the market opened for it to get up to that level that mattered to us. So once the level filled, we put on the first piece of the trade, look for the second piece after it reached a certain level, and then we use what we have as our profit maximizer after the trade. So again, I'm kind of reiterating something that we spoke about yesterday, which is it's not the one thing you need to know. Now, the one thing you need to know is understanding order flow, if that was the case. However, the problem that a lot of traders have is they don't go deep enough in building that argument, and we've spoken a lot about this week. So one of our members, Ranesh, yesterday, who's been, I want to say Ranesh is probably part of our private community, probably for about 4 months now. If I'm wrong about that, Ranesh, just let me know. So the point was, he's been very excited about the fact that he's able to recognize now with the sector rotation, with order flow in certain stocks, and whether or not it's obvious. Ranesh has been talking a lot about trading less and or placing good trades that maybe don't necessarily make money because the follow through might be a little bit choppier, or we have news like that mini flash crash we had in the market yesterday, that he understands now that losing less on tougher days is a part of the process, which is actually what I want to take us into now, 10 trades. So again, I asked everybody to raise your hand. Actually, David M., I will do that. David, give me a stock and we'll talk about that. Okay. Don, let's see. Don, where do you find that sector chart? Don, that's actually done by myself personally. That's part of my process at the end of the day. So I'm actually going to pull this up on the screen. I'm actually going to minimize this for a second. And we're going to pull this up on the screen. So we're going to actually go over to here again. And then we are going to go back into here. And so raise your hand, and we'll just, I want to get like the real raw answers here. Okay. So raise your hand or type in yes if you've been trading for a while. Let's say you've been trading more than 6 months, or maybe even a little longer than that. Raise your hand if you always feel close, but you can't get to the other side. For whatever reason, you just can't figure out what that last piece is to get profitable. Type in yes. I'm saying it because I went through it. You feel close, but you can't get profitable. All right. Foolish Niles, absolutely. Myself as well. Okay, David, we'll take a look at the Roku chart. let's see, beat Jungo, definitely losing less on tougher trades now. That's awesome to hear. Awesome. Ross Marshall, I hope to see you in the boot camp soon. Myers Taylor. Okay, awesome. And David. Okay, so here's what we're going to do. We're going to first talk about this. Okay, if you've never seen me talk about this, this is one of the core foundations of understanding how to get profitable. And I promise you, I'm going to set this up like it's a movie trailer. I promise you, once we talk about this and you take a couple of minutes to think about everything about trading is going to change. Everybody here has heard about the context of having an edge to trade, right? So let's say you have an edge, and we use the phraseology 10 trades because it's just easy to wrap your head around. It doesn't have to be 1,000 trades to make the edge work out. The very definition of an edge, and I know Catherine Goodson was on it here with us yesterday, and we were talking about how many trades you actually need to make to be profitable, and we use 3 to 1 as a risk-reward ratio, which basically means you don't even need to be profitable more than 5 out of 10 trades to be to actually make money, assuming that you keep your losses reasonable and you earn what you're supposed to on the winners, right? So this image right here is something that nobody ever thinks about. And I shouldn't say nobody. I know we have a lot of really smart people on our call. They don't think about it enough. And here's how I know it's not thought about enough. It's because you give too much emphasis to each individual trade. If you go into the market every day, if you remember the beginning of the call today, I had mentioned when you get to the point where you understand all of these deeper things, you expect to make money when you have good trade ideas. So what this image is showing you right now is the perfect scenario. You make 10 trades. Some of them are winners. Some of them are losers. Maybe trade 1's a loser. Trade 2 makes money. 4, 7, and 10, maybe they make money. But the point is, the very definition of having an edge, which, by the way, you should make your edge do the hard work, not you. Take all that stress off. Put the trade on. Let the edge work itself out. Over 10 trades, if they're perfect trades, if they are trades that match your edge, and you flawlessly only trade your edge, at the end of 10 trades, you should be profitable. Okay? Now, where do we mess this up? And this is getting back to the point where you know everything about trading in your mind, and maybe you've on your legal pad or wherever you keep your notes. You believe that you have a trading plan, and you believe that you scripted out what you plan to do during the day. Now, raise your hand again. I want participation. That was the promise. All right? Raise your hand if you've taken a spur-of-the-moment trade that was nothing that you planned to do that day. Raise your hand. You saw a news story, you saw something on StockTwits, something hit a scanner and you decided to jump in. Raise your hand if you've taken a trade that you know was not a good idea, was not one of your perfect trades, but you took it anyway. Anybody who says no is full of beans, okay? So let's just be obvious, okay? I've done it. I'm raising my hand. But here's the key to being profitable. This image right now, and I'm going to make it a little bigger, so if you want, you could snapshot it, okay? Or you can go back on the video. This image is the secret to trading success, because this image removes all of the stress of a losing trade, provided that you actually have an edge in the first place. So if you have an edge, this is how to make money, okay? Right here is how to make money. You put a trade on, you let it follow through. You put a trade on, you let it follow through. Over 10 trades, if you hold the winners, cut the losses, this is how it works. This is what happens when you add those other trades, okay? This is why you always feel close, but you never get profitable. Burn this image into your head right now. You ever see that thing where you put a rubber band on your wrist and you snap it when you know you're about to make a bad decision? This is everything. This will completely change your life when you finally internalize this and stop throwing all of those X trades in there. Because you could literally see in here, you actually did make 10 good trades and the odds follow through on those 10 good trades. It's not the good trades that are stopping you from being profitable. It's those other trades. Oh, this stock is slowing down. I know it's bear. I know it's heading straight to the upside, but it's slowing down. I'm going to put on a short sale just to see if I'm right, and I'm going to catch the top. Or this stock is trading in the middle of nowhere, but I like it. I saw something on Kramer last night. Those trades, all of those little trades, what should have taken you 10 trades to be profitable, assuming you flawlessly followed your edge, assuming you have an edge in the first place, those trades are the reason you don't get profitable. It's not the market. It's not the algos. It's none of that garbage. You're not profitable assuming you have an edge and assuming that you follow it, meaning over those 10 trades. When you think about this during the day, and I got to be honest with you, I would love to hear from you, whether it's in the comments below after the fact or in a future live stream. I would absolutely love to hear from you that you had this in your mind and you were about to place a trade that you know you should not have placed a trade on, and you stopped. You stopped yourself from doing it. There is nothing more frustrating than seeing those 10 perfect trades in your trading journal, in your P&L, and then you got all these other garbage trades sprinkled throughout there. So if you want to know the reason you're not profitable yet, go look in the mirror. Because if you have an edge and when you follow it, it works, which is those 10 bigger trades on here, it's you. You have to get to the point where you start avoiding. First, you reduce, avoid, and then you get to the point where you eliminate all of these trade X's in here that are the reason that it's taking you longer. So it should be 10 trades to get profitable. Takes you much longer because you're throwing in this garbage. You are literally messing up your edge. So that takes us to the next part, which is how to find stocks to trade. Okay. Just do me a favor, type a yes in there if that makes sense and if that's something you're going to use today, because I'm going to tell you straight up, when I realized this, and I work hard just like everybody else, I'm sure everybody on this call right now, again, awesome, you're here at 7:30 in the morning. When you realize this and actually internalize it, you'll get goosebumps because you get to the point where you're like, okay, that's one of the trades that I would have taken yesterday that I shouldn't take anymore. It's incredible. It's an incredible feeling because instead of pushing out, kind of like being in the water, you're pushing out that ball and you just can't seem to touch it. All of a sudden now you just grab it and those 10 trades are now in your hand and you're like, I'm not letting anything else in here because this is how I make money. I'm telling you, it's life-changing. And I hope that my experience can be something that you put in there into your mind immediately. So what we're going to do now is we're going to walk over and we're going to talk about finding stocks to trade. So we talked about sector rotation a little bit before, and the 3 core ways to find stocks to trade are pretty simple. And we're going to, I'm going to tell you 3 of them, and I'm going to tell you the 2 that I focus on. So the first one, which I think is probably the easiest way to start. If you remember what we just talked about before with sector rotation, and we pulled up this on the screen, these are the main sectors, and you can go into those main sectors and find industry groups within those sectors. So when you find stock, whether it's technology or then semiconductors within technology, whether it's technology or energy stocks or cannabis stocks or Chinese electric vehicle stocks, focusing in specifically on individual industry groups makes it easier to niche down. Now, here's the big thing about trading or in business in general, and you're running a trading business, is far too many people believe that if you niche down, you're going to be missing all those other opportunities. And I can tell you from experience from both the business side as well as the trading side, when you niche down into an industry group, so for example, cannabis stocks and solar stocks, or just electric vehicle stocks, or semiconductor stocks, whether you pick one of those or 2 of those, when you niche down, you learn them better than anybody. And here's the key. You'll know when they're in play, and you'll know when you should stay away or avoid them because the volume has dried up. That's way number 1. Find a sector and then an industry group or 2 in that sector. The second one is you just run scans on everything in the market, and you just look for those scans to pull up certain criteria above the 20 period moving average, above the 20 and the 50, and you have all stocks that meet that criteria. And if I could, I'll show you how I do that on Finviz, because it's kind of a common question that we get. And let me just pull that up on the screen right now here. So when I use Finviz during the day, and again, this is not an affiliate or anything, that I'm just showing you what I do. So going into the screener and the scanner, I have my template, and my template then runs all of the scans that I'm looking for. So you can see the template here starts out with, maybe you can't see it on the left here, but the price is an average $15. That's the one right here. Average true range $1.50 and 2 million. So let's say we run a scan on everything. I want performance. I want stocks that are up for the week, which brought that down to 69 stocks. And then also above the 50 period moving average. So that's 49 stocks. So that's one way of going through that big list of stocks. So now you're not looking at an individual sector or an individual industry group. Now you're looking at every stock on Wall Street that comes up and meets that minimum criteria in a scan. And then you go into finding which stocks are actually trading opportunities. Again, this is a posted pad moment where stocks that fit a scan don't necessarily make a good trade. So you now need to go from the scan, and that scan pulled up 49 stocks. You need to go from the scan to your charts to determine if that's a good idea because of order flow, because of profit potential, and how much room there is left to go on the trade and acceptable risk. The third way is using a universe of stocks to trade. And that is actually the primary way that active day traders trade, where they're in and out of the same stocks every day. And generally those stocks are good liquidity, good daily volatility, but not necessarily in the same sector. So I'll have a list of stocks that, let's say that list of stocks for me is 10 or 20 stocks. And some of them are in play on a particular day. Some of them are doing nothing. So I'll give you an example. A really good example, actually. We'll take a look at Oracle. Oracle actually has been a stock that I've been trading for a while, and then it went into a coma. You can see here working the charts, it was obvious. 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 And now it's been in for the better part of 2 months. There's absolutely nothing to do. So then we add different stocks into our watch list, like UPXT. UPXT is now in play. Roku, which we were asked about before, drawing trend lines. So let's actually do that. Roku, you can see, was in play for a while. And now drawing this trend line in Roku, we actually go down there and here. So until that level breaks, Roku's still in a downtrend and actually just confirmed back to the downside. So what do we want to get across here? You could scan, you could choose industry groups to be the master of and go sector and then industry groups. I actually think that's one of the easier ways. You could scan every stock on Wall Street looking for technical setups and then determining if those stocks are valid trades for today. And then you could pick your universe of stocks, kind of in the idea that I just talked about. Now, a good question that we get all the time is, how do you know when stocks go into or out of your list of stocks to trade? So first I want to say which ones I use personally. I actually use all three of them because one of my jobs, my mission, as I say, I want to make it easier for everybody in my community, in our private community, to understand what great setups looks like. And that's really the biggest thing that we do in our game plan meeting, which every day starts at 8:30 for us. We're going over example after example after example. This is a great idea and why. This is not a good idea and why. And you get to call them out. We have that personal interaction every day before the market opens. But sometimes stocks are in play for a long time. They could be in play for 3 days. You need to understand what in play means and what kind of follow through you're getting. And generally speaking, and this is kind of an advanced tip, and we're going to show you on a chart. Generally speaking, order flow is kind of easy to spot. And again, this is a writer downer, whether you're using industry groups, scanning everything, or picking a universe. The weekly chart is where you understand order flow is obvious or if it's not. And more importantly, when it changes, which pulls that stock out of your game plan, and then you might want to put something else in because it's obvious. So I'm going to show you one of the more realistic charts of that, which is XPEV. XPEV, and go out to the weekly chart. You can see here, we just had an amazing 5 weeks of buying. And now look at the weekly chart. It's a mess. And what we call melted candlesticks, opening and closing near the same price and not much going on. So if you could just quickly visualize that as, okay, I'm going to keep this stock in my game plan until it changes. And now you understand what it means and what it looks like when it changes. Personally, when I do the game planning for everybody, I run all three of these scans, industry groups. We start out with sectors, and then we go down into industry groups. Then we go into scanning everything, and then I go deeper into the list. And then I go into the universe of stocks that we trade every day. And then all day throughout the day, on top of the game plan meeting, that's when we have our final decisions on what we're trading for the day. So if I was to, let's say we met at Starbucks and we have a coffee and you're like, Pete, just which of these is the easiest way to start to feel confident? So we're going to keep this in the context of what we talked about before with 10 trades. And I'm actually going to pull that up on the screen again, because I really want this visual to be in your mind, which is really finding the 10 trades and those 10 trades being obvious. I'm going to pull this up and we're going to finish up the video with this on the video, which is this, okay? You have this versus the one that has all of those black dots on it, okay? When you have confidence in what you're doing, you strive to have this. If I was to meet you for coffee and we sat down and we're like, okay, which of these, how do I find the easiest stocks to trade that I can have absolute confidence that if I follow my edge, there's a good chance I'm going to get paid month after month after month? I usually would go with number 1 and number 3, actually. Niching down to an individual industry group that you learn like the back of your hand. You know the chart patterns. You know what an average good volume is for that day. You understand the news that matters. You understand the economic numbers that matters. If it's financials, like I love to trade the financial stocks. I love to trade Morgan Stanley, JP Morgan, Goldman Sachs, those. Then you go off on a little bit other tangent where then you have the credit card processing companies. You might have Square, PayPal, Visa, MasterCard, American Express in those little pockets. So right there, that's 9 stocks in just one sector that you can be paying attention to. So you kind of narrow that down. And I'm going to give you like, this is kind of like a ninja thing that a lot of people don't talk about that is kind of important, quite honestly. So let's say you have those stocks in your list and you're like, okay, I like those stocks. I know I'm going to trade those stocks today. And we spend a lot of time, and we just talked about it before, about how yesterday's sector rotation really wasn't obvious. There really wasn't a ton of stuff to do in there yesterday. We found some good individual ideas. And we talked about how Ranesh pulled his scaling, his position sizing back. He's okay with some small losses if it's not as obvious. Here's the key of why I would say niching down into an industry group is a good first place to start. What about the opposite of that? When all of those 9 stocks are green from today's open, green from yesterday's close, green for the month, and green from Monday's open. And so now it's Friday. That's when you need to size up. And if you're not niched down like that and really understanding somebody with a lot of money is putting it into financial stocks today, if you don't know that, if you're not planning for that, if you're not niching down, you're going to leave money on the table. So the whole point of that is you niche down, and when it's super obvious, you're like, wow, that whole thing is green. Maybe I should scale up a little bit. Maybe I should hold a little bit longer. All of that money's on the table right now. I'm going to go follow that smart money until I see a reason not to. The third scan, creating a universe. And by the way, that was a ninja trick right there, because a lot of people just look at individual stocks and like, okay, my stock is up today. But if all that money is flowing in there, you better size up, because there are days when you should make 3,000, not 1,000. If everything is on the board, everything looks obvious. Don't celebrate a good day at $1,000. Celebrate you made what you're supposed to on that day. And again, I'm just using 1,000 or 3,000. You know it's a good day for you. The next part is building a universe. So building the universe is kind of interesting. So the way that I would look to build a universe is go into the major ETFs. Go into the spider ETFs and look up the biggest holdings in those ETFs. So you can go into the XLF, the XLV for healthcare stocks, a bunch of XLE energy stocks. You can find them all over the internet. Go into the largest holdings and pick like one or two and build up a list of maybe 10. So pick a couple of different, maybe pick 5 different major sectors, and then pick the 2 leading stocks that meet your criteria for price range and all that kind of thing, and put those in a watch list. So they should be in play when that industry group is in play. So you go from individual industry group all the way down to, let's say, semiconductor stocks versus leading stocks in a leading industry and only trading those. But now you got a little bit of a list there that have liquidity, volatility, and what you might call market leaders. So the market leaders typically move when the market's obvious. So when the market's obvious, then you lean on your market leaders and they should follow the market. But the key is you're already going to have that list built before the market opens. And that's the list you're going to work every day. So when you have this on the board and you already know which stocks you're going to trade and you know when they match your edge, that's getting back to what we started today's call talking about. When you wake up in the morning, you pour your coffee, you get ready for the market to open, you should expect to get paid. You should expect to make money as long as we get follow through. I'm telling you right now, and don't misquote me, please. If money's on the table and you put those trades on it and you get follow through, you now have scripted out your success and you know exactly what kind of business you're running. That doesn't mean you're going to make money every day. There's plenty of times I put on trades. That was a good trade. And maybe it falls into, maybe it became this trade. Okay, a good trade didn't make money. Second trade, all right, that one did make money. Okay, that one did make money. But at the end of the day, at the end of the week, if we do what we're supposed to do, I expect to make money if we get follow through. Remember, all the hard work for the trade is prior to the trade opening. All right, so we talked about a lot of stuff today. We talked about feeling close, the reasons you may or may not be profitable. And again, we brought that into the screen, simply talking about this. I'm going to leave you with this visualization. This is the reason you feel close and don't get profitable. So again, put that rubber band on your wrist, snap it when you're about to make a trade that you know you're not supposed to make. All right. So I need to end this call because I have to get ready for our private game plan meeting, which starts every day. I just want to thank you so much for being here with me today. It absolutely means everything to me that we're sharing in this experience together. If you find these videos helpful, definitely click down and subscribe. I would really appreciate it. Hit the alert button so you know when new live streams are coming out. And if you want to join us on those pre-market game plans, click the link below in the description and see if the bootcamp is the right choice for you. It's a 30-day experience, and I actually can't wait to see you on the other side. I think we have the greatest people in the world that we work with in our community. I feel very privileged to be working with them. All right. Have an awesome day, everybody. I will speak to you soon. Have an awesome weekend and have a profitable day. Hope we helped you today. Take care now.